Welcome everyone. Thanks for joining us today and this webinar on the 30th of September and the last day of the month, in fact, the last day of the third quarter, and be interesting to see what the last quarter will bring us. This is, because of that, a bit more different day in a way because the month is ending, quarter is ending, so some traders might want to be booking profit on positions to show to maybe their investors, for instance, or for themselves. So that could always have some different effects on the market that we should be aware of. With that said, though, let's take a look at what the market could be providing for my own trading, at least. But before we do that, the disclaimer here explaining that the material of this webinar is intended for a global audience. It may not be suitable for all viewers. To find out more about that, and if this is suitable for you, and get corresponding info and charting conditions and other details, please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, trading for exchange and global financial markets is considered high risk, and it may not be suitable for all investors and traders. Please seek the advice of an independent financial advisor for more information on that. And this webinar is not advice, but for informational and educational purposes only. You can always ask for the risk disclaimer at admiralmarketsglobal.com. You will find contacts, and you can always request this disclaimer. And I thank you for your attention. Before an entry is done, I always take a look at trend, opportunity, filters, trigger, and entry method. And I always also take a look at the Forex calendar to see if we have news coming up. This week we have on Friday NFP, and we have German unemployment change in an hour and 6 minutes, pound GDP in an hour and 40, European CPI in 2 hours 11. So there's quite a long list of news. Dollar news, consumer confidence, CAD GDP. So the regular stuff. Tomorrow ADP, Thursday Euro interest rate, Friday NFP. So those are definitely things we need to be cautious of. So today's focus is Camarilla, and that's what we're going to do right now. And let's start off with maybe, for instance, the euro dollar, as always. Your dollar is quite choppy, so I'm not all too interested in this pair at the moment. Price is basically going flat, sideways, inner range. The moving averages are flat. Prices in between the H3 and L3. If, for instance, you were maybe looking at the charts earlier this morning, maybe taking a short at H3 as it touches that level was something you had in mind. Would have been okayish, as you can see, but there's not a lot of profit potential, in my opinion, between these support and resistance zones, L3 and H3. And I'm not a big fan of, I'm more looking for actually breakouts more than bounces off of the Camarilla levels. In theory, obviously, you can trade both. Unless price gets up to an H4, H3, or if price is in a very strong trend and then retraces to a Camarilla, for instance, if we're in a downtrend and price retraces back to a Camarilla, then a bounce off of that level for a short makes sense. Although the euro dollar is in a downtrend, don't get me wrong. If you look at the hourly, you can see price is in a downtrend. Let me just clean up this template a bit quickly. So therefore, H3 short does make sense. The 1 hour moving averages are flat. So it is a downtrend, but there is no momentum at this point, because the 21 band on the hourly is flat. The 4 hour is maybe in a downtrend. So I would therefore personally be a bit more cautious with the H3 because of that. If the hourly would have a very good angle like this, then in my opinion the H3 is, or H4 are a bit more valuable than when it's been already flat for quite a while, and also price was above it here. I would rather wait therefore for a breakout below L3 here for downside trading. If price gets, for instance, to the H5, that would change things. That could be an interesting, still an interesting zone for shorts for that downtrend continuation. Upside, we could see maybe intraday upside if price starts to push up and show momentum. There could be maybe, for instance, price spikes up to H4, retraces then, and then bounces. There could be that long trade up to H5 from H3, basically break H3, go to hit H4, go back to H3 and then to H5. That particular trade from H3 to H5 is not even that bad for an intraday level, but it is against the trend. And I would rather probably, obviously trading with the trend is nice, so trading it from H5 down or below H3 has also its advantages. So this is the playing field. Does this make sense? This is the playing field basically. We got downtrend but flat momentum at the moment on the hourly. So this is why I would be more cautious. Obviously, looking at the higher time frames, 4-hour, daily, weekly, it's in a massive, massive trend. There's just prices respecting this bottom right here, this support level 126.60-ish, roughly 126.50-ish. And the price is going a bit sideways off of that level. And you could even put trend lines like this to capture what is looking like a triangle. And the triangle break will give some idea also where price will go, but I wouldn't trade the triangle break, as I said, because of the fact that the L3 is still below it and the break to the upside is counter trend. So I would rather keep an eye on the Camarillas than this triangle, but still the triangle itself could give some indication, of course, where price might break to. It's just I wouldn't trade it. It's just maybe as max informational purposes. Pound dollar is showing a bit more aggressive rebound to the upside. It has pivot points above it though. It has a layer of resistance above it. Right in here, this resistance line, this resistance line. This resistance line. I would not be that keen here either on taking it long, too much resistance above. Pretty close to the H5 too, so if anything, looking more for rejection, a bounce to the downside, despite the bullish moving averages maybe on the 15 and even the hourly. The 4-hour, don't forget, broke this support line, and that could be the signal that price has finished its correction within a strong downtrend and it's back into this downtrend. That is my primary analysis. So this hook back could be just a hook back for more downside. Therefore, looking more like short territory than long territory, especially if you see heavy levels of resistance like these trend lines, like pivot points, like resistance zones. So if anything, I'm keeping an eye on this hourly candles, 30-minute candles, 4-hour candles for some rejection signals, or even 50-minute chart, but not seeing them as yet. This doesn't look like a rejection. Could be harami here, but that's a bit on the early side, I think. I'd rather wait for a clear signal of price action, candlestick pattern, maybe on hourly, 30-minute, maybe 4-hour, and trade it to downside. Or if price does manage to really get up to the H5, for instance, then look for maybe a 50-minute rejection. Why am I not looking for a 50-minute rejection here? Because it's still halfway to H4, H5. So just there is no obvious level where price would be rejection, except the 61.8 fib maybe. There is a fib. But other than that, there's no Camarilla, and this is a Camarilla session. So 50-minute bounce is nothing wrong with a 50-minute candlestick pattern, but you would want to see it not halfway a zone, for instance. You wouldn't want to see it halfway somewhere in the middle. You want to see that rejection at extreme, because the 50-minute chart is obviously incorporating a lot less time. Therefore, the magnitude of any price action signal is going to be less. So you want to make sure that a setup is not taken halfway a playing field. You want to wait for an extreme, either an extreme where price is breaking through a breakout level or getting really to a good bounce level. Often enough, traders don't have maybe the patience to wait for price to show its true color. They tend to take it, let's say, halfway, right? They see price doing a bit of that, doing a bit of that, and this, and they say, oh, I was right. The price is showing that I was right at this point, so I might as well take it now before it's too late, and all these ideas pop into mind where it's better to wait for price to reach an extreme, either really get to a resistance level or really show that it's breaking. That's even true for range traders, right? Range traders want to wait even more so for range traders because they're waiting for price to really get as close as possible to their bouncing spot. So although if you're a FIB trader, this could have been interesting. If you're a Camarilla trader, you're really waiting for H5 to get to H5, price to get to H5 as a bounce for downside, or price to even break below L3 at the moment. If you're looking for shorts. Upside, in my opinion, well, there could be a bounce if price retraces. There could be one more bounce up there. That is possible. I'm not a big fan of these corrective trades like this that are against the trend though, but it does sometimes work. Dollar Swiss is just like the euro dollar, is a bit of a choppiness. Dollar yen choppy, but we can see if price manages to break through support like that. We are below the L3. Price has gone below the L3. So if it breaks through the support, there could be a breakout to the downside, in fact. But there could also be a valid break to the upside if price manages to break through these resistances. So at the moment, it's more bearishly aligned because of the moving averages, slightly. But if price does manage to break above, hook back, I would gladly take the next break. Why the next break? Because the moving averages are not bullishly aligned as yet. That's why. That's why I wouldn't take the first break. Why would I take the first break here? Because the moving averages, although just barely, are bearishly aligned. Therefore, the downside break, and price is also below the L3. So downside break looks better at the moment. Tradable. Upside break, therefore not tradable. But if broken to the upside, then the long does become a factor to reckon with. And the H5 would be definitely a target to exit because it's also a psychological 110 level. AUD-USD seems to be failing. It is in a downtrend, so we can see that price is having some struggle here with the fact that it is moving up against the trend. It broke the H3, banging on the door of H4 with bullish moving averages, but it is struggling because probably of the bigger downtrend we're seeing here on the hourly, for instance. The AUD-USD is in a big downtrend too. Look at this 4-hour chart as well. So that is always a bit of a tricky situation here when we got a strong price action signal here, right? But this could just be a retracement for more downside, or is this in fact going to be correcting up? Now looking at the candlestick, this is a pretty strong candle. So I would not be all too jumpy for joy for shorts either. But obviously the momentum is strongly down as well. So it's not an ideal situation. It's an interesting spot. You can see price hammering away every time it retraced to the 21 band. It was solid ground for the bears to regain control. This one could be the same. But there is some lingering divergence, and the price action is a bit different here with a pretty bullish candle. So there could be maybe some retracement. Let's take a look at the 1 hour. Has already a bit of a bullish moving averages, 15. So shorts basically below L3 remaining the same because we need to break the low of that 4 hour candle in a way. Shorts could also be from H5 as well, same story. Whether intraday longs are interesting, just like the pound and euro, they are against the trend here too. So we're stuck in that kind of vibe throughout the market at the moment on all dollar pairs basically, and they're stuck in the same situation. But basically, yeah, it's possible if we could move up and down like this to retrace part of that 4 hour candle and go up again. And price maybe bouncing off the H3 or the moving averages here, for instance, is possible. But risky. Trying to analyze if it's worth it, but here you can see the same thing what you saw on a 4 hour chart, where price was banging downwards and retraced back to the 21 band. Here too, the hourly, same story where price is just dropping like a stone to the downside, and anytime it goes back to the 21 band, it was a good retracement. Here it went back to the 89 band. This could be the same scenario, so that's why it's a bit of caution is needed here. Daily, it's really, really very strong, but price is also pretty far away from the 21 band, so there could be some move back to that band potentially. Anyhow, also price is pretty close to this support level, so maybe some bounce here is possible. But yeah, all in all, it's difficult to say. There is some momentum here, obviously, and this is looking corrective. So it is possible to see this. Whether it's interesting to trade is really personal, almost a personal choice or not. It's 50-50. I don't know. It's hard to. It's a coin flip, I guess. I don't know. Maybe if there's a good enough money management, it's worth it. However I look at it, I can't really add anything to the story than that. Moving averages on the 15 are pretty bullish. So, this is a potential bouncing spot to that H5. Despite the uptrend, despite the downtrend on the other time frames, it could be that. There is a bit of a difference between what we see here, the aggressiveness of the band, the 21 band, compared to the other ones. Look, these bands, these retracement bands here, you see that? They're very mild, indicating correction. Here we see a bit more stronger band, and we do get the dip and up. These are mild angled bands here again. Well, here's an example, maybe a bit stronger, but then just a breakdown, and the other bands are quite mild. Here a bit stronger, and we get the retrace and second follow through indeed. These are mild bands. Okay, so well, yeah, you get the picture. Kiwi, same story, not looking as aggressive to the upside as the Aussie Doe. There's key differences. First of all, this downside is a lot more aggressive. Second of all, this upside is a lot milder. Kiwi, therefore, certainly out of the question for upside is right at the door, knocking on the door of H3, actually poking above it. But considering these factors, I would not be interested in that. I would be more interested in shorting it. If you look at the Camarilla levels, here too looking for a break below L3 though. Same story as the rest of the dollar pairs. And a lot of acceleration in this fall. Tremendous acceleration here on the Kiwi. The Kiwi started off this week with a big push down on the Kiwi dollar, and also against other pairs. The Euro New Zealand flew up a whole bunch. Oh yeah, if you're ever, I forgot to mention at the beginning. I always try to say that if you are new in here and this is your first time for you with us, or maybe second or third time, please let me know indeed, because that's very useful so that I have an idea to give more background info. Or if this is your first time in a Camarilla webinar indeed. Let's see, the question I have here is, how do you plot arrows? Do you mean these arrows right here? Above and below price? Are those the arrows you mean? And then, okay. And you're also wondering about those line graphs, right? You mean these lines on the, you mean these lines here, these green and red lines you mean? Or is also those? Yeah, okay, good. Well, the these arrows are fractals. You can place them on your chart by going to Insert Indicators, go to Bill Williams, and click on Fractals. So that's how you find them. Typically by going as usual, going to Insert Indicators, but then going to Bill Williams Fractals. That's what you need to know. And you'll get these on the top and bottom, and they indicate basically support and resistance zones. It's an easy way of spotting them. Then the green and red lines here are Camarilla levels, and that's not something standard in MT4, and I can send that to you though. The best is to send me first an email with a quick subject saying, please send me Camarilla, so I know what it's about, and I'll send that to you. All right? And what they mean basically, H3, H4, H5, L3, AL4, F5 are basically intraday levels that show the zones within the day. When price is still between L3 and H3, it's basically in between the range levels of the day. If price starts to go above H3 or L3, it's showing breakup potential to that particular side. So it's above H3, it's showing upside breakup potential. Below L3, downside. Kind of the confirmation level is the H4, L4, but I don't necessarily wait always for that level for price to get to that level. For me, the zone in between H3 and H4 and the zone between L3 and L4 is kind of, that's the zone I'm looking for, basically, where price could be in a breakout situation. The official target for Camarilla is the L5 and an H5. However, you can trade it multiple ways. You can trade it by saying, okay, if price gets to H5, I'll wait for a bounce, for instance. Or even if price gets to H4, I'll wait for a bounce. One could use the structure of the market, the bigger trend going on, to trade it also the other way around. Or one could wait for H4 to get hit, wait for price to go back to H3 and use it as a bouncing spot, as I already said. So, there are different ways one can treat these Camarilla levels, but they're good intraday levels for support and resistance, and then it's up to us how we can interpret them and use them, depending also on various other elements that are going on in the market. How do you plot the zone? There's no H1, H2. There's only H3, H4, H5, L3, L4, F5, not the 1 and 2. And how do you plot the zone? Well, you have to add the indicator. Once you add the indicator, these levels will be there automatically day in, day out. They'll be automatically adjusted. Kiwi, Kiwi in a very big downtrend. So, one thing we could do is maybe put actually a fib on this very first correction here. Price is actually at a minus 272 target, so it looks more like a bouncing spot. The max I would expect price to go is minus 618 target, which is at the daily R1 as well. So any shorting the stop loss above this top should be okay at 78, above 78.75, I would say, in my opinion. That is a pretty big stop loss at the moment. So even shorts right in here is possible with stop loss above 78.75. From an hourly perspective, if more confirmation as a swing trade, if more confirmation is wanted, then I would be looking for price to go below the daily pivot point, below the 21 EMA band as well, and price to break below that and close with the hourly candle below this 77.78. If it closes below 77.78, then this top could be used as a stop loss placement instead of putting it all the way here. That's because price is moving away from this zone, and therefore a tighter, or the stop loss could be moved. We don't need to put a stop loss here at the moment. At the moment, there is no guaranteed top in here. We don't know that yet. That's why placing a stop loss right here is risky business, because who knows, price might make another spurt up. On the 15-minute chart, the uptrend is present. So if price is indeed making an impulse consolidation and moves up again, a stop loss that is above here will be taken out. But a stop loss is above resistance, the higher resistance, there's less chance that price will be taken out. The wider stop loss is better at that point. However, if price starts to break down like this and close below the 21 band and start to show bearish momentum, then this is a reasonable confirmed top, reasonable enough to put the stop loss there. When the hourly candle closes below the 21 band, this will probably move down, would have probably hit the 21 band and start to move down again. This is how it will look like on a 50-minute chart. And you'll see the 21 band move down like this. So this is an early one, basically assuming a swing one, assuming that this is just a correction for more downside. On a 4-hour chart, though, we see that we are in a correction. That correction can last long. So sometimes instead of, it's good to wait for a bit more confirmation for close below the daily pivot point. But there is some potential of price indeed kind of a zigzag up to here or the daily R1 for downside. That's an early potential. The daily pivot is a more confirmative way of approaching it. Even more confirmation will be below the L3. And we can see that if we place that blue line on the chart, we see that that is the stop loss zone I was thinking of. That's just above the H4, which is good. So H4 itself could also be a resistance zone if price doesn't get there. It would also equal this minus 618, by the way. Here you see minus 618 together with the H4. With it, in my opinion, the stop loss zone right above it, that would be a very low risk, in fact. A 50 with a 78.80 stop loss, only 30 pips. So it would be great if it got there. 30 pip risk, but a potential of 120 pips probably. Let's take a look. But yeah, sometimes price doesn't get up that high. But if price makes it down to the daily S2, it would be about 220 pips, 230 pips. So that's even close to an 8-to-1. Obviously, that's a lot. So there's a chance that price doesn't get there. There's a chance that, of course, price goes through the stop loss, etc. But an 8-to-1 R2R would compensate many of those losses if one of those wins materializes. So the Kiwi, in my opinion, looking bearish. The question is when and where. Maybe not here is probably not the ideal. As I said, better wait for more confirmation. Higher or lower is often better. Hope that makes sense. Dollar CAD is in a bullish structure here too. We're getting retracements as we speak, or some smaller sideways move. Bullish uptrend, therefore risky to short here, despite the fact that the moving averages are bearish and prices below the L3. I would only look for upside on the dollar CAD. Euro yen is a mess. Very choppily slow downside, and I'm waiting for a bigger breakout before trading it on a lower time frame. This is a 1 hour, 4 hour consolidation zone. Look at the 21 band on the 4 hour here. Look at the 89 EMA on the 4 hour converging. Prices has no momentum, has no direction at the moment. I'm looking for guidance on the euro yen. I'm looking for price to guide me on the euro yen. Not want to speculate on any breakout here because price is just no momentum. So if it does break out, there's a chance that price would just get rejected. It could get slammed. The break might not go anywhere. And price could stay in this zone for longer than we hope. So no, not interested. Same with the pound yen, although it is pushing up. It is the same story. In fact, has even a longer track record. Not interesting for me. Euro odd. Has been in a good uptrend. Same story as the odd USD though. There is momentum to the downside here. And we see that momentum with the 4 hour bar and engulfing twins, but the uptrend is still present. So here too we see that same story throughout the market today, and that is something we just occasionally bump into. Not everything, of course, is ideally set up at every point in time, obviously. And today's market seems to be like that at this moment. It's just caught in such a zone that is it a retracement? Is it trying to show reversal signals? In that regard, because there is that uptrend present, some of you might have thought about taking that long in the L4 because of that. One thing I didn't like about that personally, though, although I did consider it, was the strong fall we have here. The momentum, basically. But any longs did work out pretty well. The pound odd, you see, it's a bit different method, but there is a long from this point, but based on a different strategy, by the way. But that's anyhow, it does show that your long from here is on a pound odd working nicer than the euro odd, by the way, because the euro pound is in a downtrend. Odd yen maybe. Let's take a look. One of the advantages of taking basically the the opposite side of things when price is an uptrend and looking for the L4 retracement for upside. But I wasn't really a big fan of it. As I said, too much momentum, too big of a fall this morning, in my opinion, for that scenario. So I gladly filtered that out. Let's see, odd yen. Didn't look at the odd yen, so just give me a second to take a look. Well, if we start just from, it's a bit of a mixture, isn't it? Weekly broke out, but didn't break all too long, as we can see, before it's back below that resistance line. Still below, above support though as well. So it could easily be a retracement for more upside. And if we put a fib on this first correction, we see that price is pretty close to the minus 618 target, which is probably pretty close to the 78.6 fib as well, and therefore a bouncing spot. But we just missed it, in fact. You see that? The candle lows about a mere 15 pips away from that level. So maybe this is already the bounce, maybe, but not there quite yet. That's always sometimes a bit difficult. Did price now really bounce off that level if it's a small difference? So we see reason though that the price could be bouncing, but on a 4-hour chart, this correction like that, most likely correction, we have to assume that because this is a break, and this could be a three-way correction like that, and then again a bounce or continuation. That obviously has created a downtrend in the meantime on the 4-hour chart, which would naturally lead us to think that this is maybe still a shorting zone within the downtrend. But if you look at the bigger picture, we realize that this double bottom could be a bigger bounce potential for a bigger upside. Therefore, that downtrend here is maybe less relevant. Therefore, I would be probably a bit more cautious and not traded either way at the moment. Either price gets indeed to that 78, really gets right close to that 78.6 fib and minus 618 target at closer to the 95, which is the weekly S1. Still need about 10 pips below this bottom. Then that could be an interesting long. Could be hitting this trend line too. Could be hitting the confluence of a weekly S1 and a monthly S1 pivot points and a 95 psychological round number. So yes, longs from 95 with maybe, I think, in my opinion, I would probably use 25, 30 pip stop loss, probably 30, for a pretty wide target. Obviously, a very big reward to risk. Could therefore compensate the fact that the trade might not work out, of course, logically, like any trade. So that is one idea. Shorting here seems it could be the resistance spot for that fall, but because price was so close to hitting the 78.6 and making a double bottom here, I would consider the target being taken out. Therefore, the chances of the price making that fall are not as high as I would like them to be. Therefore, I would not be looking for personally for shorts in here. What about if price doesn't get, how about if this is a double bottom and bounce and price doesn't get to the 95 level? What then? And price starts to move up. Well then, let's take a look. We got a resistance zone here that probably needs to be broken. So until we get above 96, it doesn't look like great longing area, but if it does get above 96, we got maybe some swing trades to the upside. In the meantime, before we get to 96, from an intraday perspective, what do we got here? A longing area from L4 or L3 maybe. And can price make the zigzag like this up to the H5 resistance? Same story like all the other Aussies, in fact. And if you look at the 4-hour, just like the odd USD, the odd yen has a pretty strong 4-hour candle as well. So there is a good chance we can retrace half that candle and indeed move up. Ideally, longs from 95 or above 96.10. Shorts, not for the moment, in my opinion. A riskier long could be the retracement of this 4-hour candle. And maybe a bounce off the daily pivot, for instance. So yeah, it's these two contradictory kind of like elements going on here, where you got really aggressive signals of price action, whereas maybe the pound dot, for instance, long at the L4 made sense to me. The short at the H4 could have made sense as well. It's the same story. Although I said not to short, that one could have made sense, but price is already here. So it's basically the fact that there is a trend on the Aussie, which is Aussie weakness, and price intraday price has brought it up to a spot where Aussie weakness might continue. Or is Aussie going to show signs of further strength and reverse that trend? That situation is always, as I said, not the easiest to trade. In general, though, dollar strength has been pretty good and reliable over the last few weeks. So maybe that one would be the better one to focus on. You can see the pound dollar moving down pretty strongly off the 61.8, and dollar Swissy, dollar yen breaking through a bit to the upside here, the euro dollar too. So maybe today another dollar strength scenario when it breaks through L3 or H3 might be the better one to focus on. The euro yen, pound yen are not interesting, as I said. Here too, the dollar CAD, for instance, making some action to the upside here. Looks like we had a bounce off L4, so maybe even, for instance, a long from a 111.40 or 111.44-ish could make sense because it could be a retracement for that bounce. It is proven to be quite a support zone here, and if you didn't take the L4, then price is not probably going to get that deep anymore, because if it dips down, it's maybe going to make a smaller inverted head and shoulders like this. Obviously, there's a lot of support here, and price is moving down very choppily. I tend to look more at breakouts, as you might have noticed, but these ideas are possible as well. To look for bounces at those support levels, even though price has already moved from maybe the main bounce spot. It's always still possible to look for a bit of a higher spot when price basically retraces, because the market will retrace multiple times. It never goes in one straight line. So even if it bounces off the L4, it doesn't mean it could still hook back to it and then bounce again to retrace this upswing so far. That is one way of looking at it. Or if price gets, for instance, higher, if it gets all the way up here, then looking for longs maybe at the L3 then makes sense, as price does maybe this. Those would be bounce methods to position yourself in bounce trades. Now, I like the dollar CAD a bit more on that idea, and maybe the dollar yen as well, than the dollar Swissy at the moment. Well, actually, all these dollar pairs have the same stuff, so no, I take that back. It's about the same. Dollar Swissy actually is quite close to breaking, in fact, this trend line, but I wanted to hit the H3 first. Another way of looking at it is from the hourly perspective and waiting for this hour to complete 26 minutes from now. If the candle is bullish like this, we would have two bullish engulfing twins. A retracement of that bullish engulfing twin could be then the ideal bouncing spot for follow through. You see uptrend, consolidation, this could be the bottom of that consolidation. And it could be the bounce off the 4-hour fractal. It could be the bounce off the 21 band here. So yeah, so that's another way of looking at it. Once again, I could see the fact that the 21 band is still flat. So obviously this is not and price is still in it, so this is not a breakout scenario, but it could be, looking at technicals, it could be a bouncing spot. But if this hourly is a big wick, then I would be more cautious, because then it's certainly not showing the aggressiveness in the price action as yet. The other way would be to wait for more confirmation and just let price break, hook back, and then bounce. One more way would actually be for the 21 to cross the 89 again. Why again? Because we had a cross here, we had a cross here, and a cross here. What you often see is when price on a 50-minute chart, when it's in a strong trend and it's chopping in this blue zone like this, it's basically making consolidation within the uptrend. You often see a three-wave correction like this. This is like 1, like 2, like 3. And often on each of those legs, you'll see a crossover. And then the fourth crossover, or the sixth, could be an interesting moment, because that's when the correction could be finished. Why do I say 4 or 6? Because typically the correction is 3 or 5, because 5 is often a triangle, and 3 is a shorter consolidation zone. So when the 21 crosses the 89, and price is, the 21 band is going like this, and the 89 is like this, and price probably in the meantime has reached the H3, make a small retracement like this, then the break above H3 is something that I would be interested in. So, yeah, I'm sorry if about so much forward thinking in a way. I know that is always a bit less interesting than maybe looking at what could happen right now. But then again, I think it's useful, because at least you see how I look at it, how I look at the Camarilla, and how I look at the interaction between moving averages and Camarilla, and how I basically try to plan ahead with setups what I'm looking for. So when something happens, what I'm looking for, I'm already prepared. I'm not caught by surprise. So I know that maybe this is a bit, therefore, a bit more abstract because of that. So, but unfortunately, this is just, we cannot change the market. We cannot change how it looks like, right? Unfortunately. So we have to deal with the cards that are dealt. And that's about it for today, I guess, from my side. Do you have any questions? I don't have any particular pair still in mind that can look at, well, maybe Euro New Zealand and Pound New Zealand. They have been in a grand trend, by the way, with the recent spike up. So this is absolutely looking bullish and remains looking bullish despite the fact that it already moved 500 pips from this breakout candle to here. 500 of them. That is a lot, I know, but it's yeah, the AO is showing that it could still move up more. So I would be interested in breakouts to the upside. Unfortunately, the Camarillas are not that pleasant. It's quite high, the H3 here. Another 120 pips before it gets there. Price most recently bounced off the minus 618 target and L3. So I looked at this one earlier. Sorry about that. It was a good confluence of a target and an L3. Well, anyhow, even if the long here was missed, because this is a good long, because a big trend. Another way of looking at it is waiting for a 1 hour candle to break above the 21 band. That would be already a breakout scenario. Probably with a stop loss below here would be okay. That is still in front of us. Or wait for the candle to close above the 21 band, but then place a pending about halfway to get a bit of a discount. That's another way of looking at it. Placing a fib on this upside and taking it anywhere halfway after it retraces. Another way. Waiting for the 21 above the 89. Or waiting indeed for price to break even higher above the H3 or above at least maybe this resistance. So there are plenty of ways still to position oneself in a long potentially. It is looking bullish. It is looking long potential. So that's the only direction I would be looking for today. L3 was not a bad spot, but it is not the only spot. Pound New Zealand is probably even better because the Euro Pound is in a downtrend. So the Pound New Zealand, in fact, could trump the Euro New Zealand in that regard. And yeah, the Pound New Zealand is already very close to closing above the 21 band. So either that or a break above the hourly resistance. All of those are potential longs with a short below this bottom. It's a big stop, I know, because it's just the New Zealand is racing like crazy, and that will increase the sizes. Or here again, wait for the hourly to close above the 21 and wait for a dip off the daily. There are really a ton of methods how one can approach the 21 band and in combination with Camarilla. But at this moment, I would personally say waiting for a bit of retracement doesn't hurt, I think, because it moved up about 120 pips. Not that that means anything for Pound New Zealand because it's racing like crazy. But normally speaking, you get a bit of a retracement before continuation. So I think that that makes the most sense. But here, retracement upside looking good to me. Let's see how tomorrow, if that indeed panned out. Back into maybe this 208.50-ish zone here. 60 maybe. Price could go deeper, but halfway from here to anywhere it stops. Pound New Zealand, definitely one that is interesting, I think, for today, more so than the Aussie, in fact. But I tend to forget the New Zealand in our class. We're in our webinar here. Tend to more focus on the Aussie, dollars, euros, pounds. But the Kiwi actually is nicely set up for today. The pound CAD, we were looking at it last week, and the fact that it could bounce off 108.50 or 108. Let's take a look. And price is just chopping like this sideways. So anyone who took the long at 108.50, yeah, it's you still best is just to put it at break even and hope that it breaks to the upside. And if it doesn't, and if it turns out indeed to be an impulse correction impulse, then nothing is lost on the trade, and the trade closes for break even. However, if this is a retracement and price does to break out, start to break to the upside, and breaks above these resistances, that's great. Then anyone who took the long in here is doing well. The trade is now up about 70 pips, but I don't think that is enough compared to the risk that was taken. Let's see, about 100 pip risk. Could be okay-ish already. Depends how much profit you are comfortable with. It does look corrective like this, but one never knows. The thing that I think for sure is a certainty is that no risk should be taken out of that trade. It should be at break even. So tomorrow we have strategy. We can take a look at how the market played out today. And in the evening, Nana is going to take a look at Fibonacci guide. Thursday, 2 webinars as well, one in the morning, price action at pivot points, one in the evening, support and resistance, new methods. So tomorrow and Thursday, one webinar morning, one webinar in the evening. I hope to see you then. If you have questions, still let me know. Otherwise, we'll wrap it up for today. Here you can see the 5-minute chart is trying to, with the Euro New Zealand. No, I want to look at the Pound New Zealand, sorry. Pound New Zealand here. It is showing that price is above the 21. The 21 is crossing the 89. So, but as I said, everything comes in waves. Even this sprint up has to be retraced. So that's why sometimes waiting for that confirmation is good. We're waiting for that retracement or pullback. A lot of things can retrace or pull back. You know, and if this hourly starts to look like a big wick at the end of this hour, having a bit more patience and waiting makes sense. In general, though, I'm looking for bullishness, and I don't expect this bottom to be broken for the moment. Although there's more guarantee if price starts to break above this level. So it's a cat and mouse game. We're waiting for, as cats, we're waiting for the mouse to be in a spot that we have the highest chance of catching. And the mouse is, at the moment, quite slippery because price is kind of halfway. And as I said, halfway zones are never really pleasant. Price bounce off here, but has a resistance here. So either wait for price to show more bouncing signals from lower or let it break, hook back, and then go, for instance. But one way of a confirmation could be if price, an hourly candle closes above the 21 band here. Not that I would take it long right away. As I said, I'd rather wait then. If it does that, then wait for the retracement. But if it doesn't close above the 21 band, then I would still be waiting, because especially if it has a big wick on the hourly candle. If it does close above the 21 band, it could be the trigger, but not the entry. The entry then anywhere maybe halfway, for instance. So I added a few things to the mix, but if you want to keep it more simpler, then for instance waiting for that 21 to cross the 89 and waiting for the next break of a fractal reduces maybe the complexity of the things I've mentioned here. That would be a more simpler way of looking for it. And I think the Pound New Zealand is a good pair for that. I don't think the pound dollar is a good pair for that. We had a crossover, for instance, but I think the upside is limited. But this could be a bouncing spot, and it could go to H4, H5. It's just that with all these dollar pairs, I'd rather probably short it at resistance. I'd rather short it maybe at the 163, or wait for the break of the L3 for downside, then take these corrective slower gains to the upside. Sometimes I do, sometimes, but I'm not a big fan in general. There is a chance, though, that price could bounce here, as it is trying to do, but it does have that momentum. It does have that potential. So if, from an intraday perspective, it is possible. It's just not lined up with the bigger overall downtrend. The overall downtrend is, the overall trend is still down, and therefore looking for price to trade it from the resistance or from the breakout. From a longer term point of view, makes sense, right? Doesn't mean that from an intraday potential there isn't that bounce potential there. But I like the pound New Zealand upside more than the pound dollar, because the pound New Zealand is already an uptrend. The pound dollar is in a downtrend. So I like the pound New Zealand upside more than the pound dollar upside. Or maybe even the dollar CAD upside here, right? Although it's still early, this is showing that it has some bounce potential. Will it bounce? We never know. But this could be a bounce potential. All right, those are my 2 cents again on the pound. Let's see. So all in all, basically, I like the dollar. I think the dollar could be interesting today. I think it could be interesting against the euro. I think it could be interesting, probably the euro a bit better than the pound, because the euro pound is down, as I said. Against the, for instance, the dollar CAD or dollar yen. I have to take a look which one is more interesting. The dollar could be interesting today. The New Zealand could be interesting. The yen cross is not. The Aussie crosses don't seem that great. Yeah, that's the quick summary, I guess. The CAD doesn't seem that great. The dollar New Zealand seem to be the most interesting at the moment. Well, folks, thanks so much for being here, and we'll be back tomorrow. As I said, wish you all good trading and a very good day, and hopefully see you soon. Cheers.